also a CNBC contributor. Lo, good to have you. And I mean, what a month. Amazon is up about 24% in the month. Apple is up about 17%. What's the most important sort of earnings report that you saw this week? Most surprising that changes, if at all, the way that you look at this environment?
Were the results from big tech companies that focus on the cloud. The reason being is we wanted two indications. The first indication we were looking for is we wanted to see how resilient these businesses are going to be able to hold up in what could be a changing and much more challenging environment. So that was the first thing that we were looking for. The second is we were just also looking for a barometer of sorts based on the composition that customers of these cloud businesses and what those customers are experiencing. So, for example, when we looked at the results of Amazon and Microsoft, we were very pleased with their ability to not show a very significant decrease sequentially from the growth last quarter. Google, on the other hand, gave us an indication based on what we suspect is a higher concentration of retail and e-commerce, advertising-heavy businesses. Their growth slowed a little more. So that could be a canary of sorts in the coal mine looking ahead.
Okay, so that's the cloud software side. What about Apple? And I'd throw Amazon in here a little bit too, because there are big questions about the impact of China shutdowns, the impact on supply chains. And, you know, Apple was only down 1% in China. Amazon was chugging right along, said it didn't see the sort of demand concerns that we heard about from Walmart at the beginning of the week, and showing, I guess, a different demographic for your mainstream Amazon shopper.
That's right.
So, you know, when you're mixing in the hardware aspect and the concerns about the consumer, what did we learn there? Anything good?
Yeah, John, I think your points were precise with how we've been thinking about this, especially with regard to Apple and the impact that the shutdowns based on COVID could have had on the business. In particular, we were very focused in on what was going to happen with the MacBook sales. You know, given that Apple is making a renewed push by having their own chip, the performance works great. I'm on one right now. And it was a slightly disappointing in the sense that we didn't see the numbers that we wanted to. But when we drilled down into the comments by Tim Cook and the CFO, what we did hear was promising in that it was much more inventory and supply chain constraint related. So it appears that the demand is still there. And I think this also plays into your point about, you know, this is really a higher end consumer that we see with Apple, as well as with Amazon. You know, I think what we saw with Amazon was a surprise to me. Amazon has a much more complex business given the components that they have that generate revenue. Now, we know that their cloud business did really well. We were anticipating that. We were pleasantly surprised just to see how well the other aspects of Amazon's business also held up. So all in all, I'm really bullish about what this portends. What we also saw was a little bit of a drag-along effect for some of the smaller, more growth-oriented players across different sectors, primarily enterprise software and cloud as well. So names like Snowflake, names like MongoDB, those also have been performing fairly well.
On the not so good news front, Intel closed down 8.5% today. I spoke with Intel CEO Pat Gelsinger earlier, really kind of concerned about Q4 and their expectation that things get better from here. Do we have that sound?
Part of what gives us confidence in the second half and into next year is our consumption rate is now below that of the end user. So we're clearly drawing down a supply, and there's going to be a natural bounce back as we go into the second half of a stronger year. Also, you know, the changes were primarily driven on the consumer side, John, and the strength of enterprise where we have higher market share, higher ASPs. You know, we continue to see that. Overall, we're very confident, and as we said on the call yesterday, this is the bottom. We're rebuilding from here.
Interesting thing in what he was saying made me think back to Logitech's earnings earlier this week, where they saw a drop-off in gaming accessories and in webcams, but continued strength in the stuff you use for work, right? The office video setups, keyboards, and mice. What does that say, perhaps, about the rest of this year? Either what continues to be strong, similar to cloud, businesses continuing to buy, and what is either weak and could strengthen, or weak and could get weaker with the consumer?
Yeah, well, John, look, we are lapping some very challenging comps across the board, and I think the reflection of some of these devices, hardware that was necessary to establish a worker so that they could do a remote work for their job, we're just lapping that. And these were, kind of one-time purchases, right? Like, we've seen this play out in other areas. Peloton thought their market was bigger than it actually was until the economy opened up. Zoom thought their market was bigger than it was, but it actually was just pulling revenue forward. But that's where I go back to the cloud businesses, because these were already growing at an astronomical rate based on the demands of digital transformation, as well as the genie being out of the bottle now for remote and distributed workforces. So I expect to see strength and growth in those businesses. But in some of these other elements that were driven by a consumer and many one-time purchases, those are tough comps to lap.
Yeah, Shopify recalibrating to similar thing. The curve went right back to where it was before. Still increasing, but not off of that higher level from COVID, off of the lower level. Lo, thank you.
Thanks for having me.